So hi guys, I've decided to re-record this actually because it was faulty on the resolution, and I've had to uh, make sure I've got the right resolution so it has a better video. So anyway, programming and risk management is what we're looking at. So um, with programs, let's change over to the no, euro dollar is fine actually. Let me just I think it's euro dollars fine. Let me just get up a program for you. And what we're talking about here really is how to apply risk management and why that's important across the board. And how easy is it to program? And how I always used to think programming was something obscure, and I kind of never really trusted something running in the background. How can a program possibly uh, tell what's going on in the market? But however, because you're looking for repeatable patterns, you're looking for the best way to um, notice that, and then um, try and modify it to. I'm a bit slow because I'm getting making sure I've got the right program up. So I need Dow Jones actually. Let me. This is one I wrote um, Thursday morning, I think actually. My son was observing the stochastics that I use, and he likes to try and develop his own strategies. I tend to tweak them then for him and give him some advice and guidance. But what I'm looking at here now is Dow Jones. Let me just get up the. Let me just close that window there. Let's bring that out of the way. Let's maximize that one. And I'm looking at the 1 minute chart, and I want to get up at least 1,000,000 units because I want to be able to see what's going on over a prolonged period of time. Okay, so let me just close that one down. I have to get up 1,000,000 units, which I've done, and I need to add an indicator. Just bring that over there for a second, and then I need this one. Okay, I'll just close that. So let's just check I haven't modified this. So essentially, this was written on Thursday morning, and albeit the thinking behind it went on for some time, and we tweaked it over Wednesday and Thursday. Um, Thursday morning being when I started to apply it and so forth. Now I run about 4 or 5 programs in the background, and so let me just go back to the earliest time possible on the program here. So we're looking at January 20th, 2020. So that's pretty much a year. So this is going back a year. And I'm risking. Let's look at the um, an amount of 50 pence, because that's allowable on £1,000 account. Okay, I think it's about £700 or so for the margin on Dow Jones at 50 pence, and it's about 1,500 or thereabouts for a pound. And for some reason my I don't want to have to restart the platform. I think I might have to. Okay, let's just pro back test that. This is raised up to a pound once it reaches a certain level, and it takes about 4 months to raise up. And then these are the results. Okay, you can see they've got lots of little losses and then some large runs. So what you have here, if we look at the closed positions, is starting off with a £12.50 loss basically. So if you're running on a £50 account, sorry, £1,000 account, and you're risking 50 pence a point, you can risk less on Dow Jones. Then you're going to be dropping on this program £12.50, and you can see from that there's lots of little wins, and then some larger runs as time goes by. So believe it or not, all these little runs, it doesn't draw down that much. I mean, it would be a fair bit for a £1,000 account, because you're actually risking more per trade. What I tend to do with risk management with programs is only risk actually starting off 1% for the entire program, and if the program reaches minus 1% at any point in time, it'll quit, it'll just stop. And you do this when you're starting, because you don't want to be losing a lot of money. So that's an interruption I didn't need just then. I've just locked the door. So yeah, lots of little wins, and then you'll have the occasional run that will spike it up a bit for you. So it's 24 and 30 pounds, and a lot of very small wins. Got £104 there. That's when it starts to shoot off. £60, 33, £256, £29, 83, 61, 99. Yeah. And then after that, it's basically here. It's made sufficient profit to go up to £1, and then it's going up to £1 per point. And all programs have to, as with your trading actually, if you're not doing in your trading what programs, how I programs to trade, then you're not trading correctly, because it's all about risk management, and you have to allow them to make some profit, especially when you're starting off. So when I'm back testing like this is electronically testing it in history. Now, there's nothing to say, albeit they're reasonably accurate. If I back test a program and I've been running it alive for a while, they pretty much match up. Same amount of profits, same trades, and I don't think there's any variance actually, to be honest with you. But when you're looking at the lower time frames, it's another issue, especially on the minute time frames, and therefore you have to be a little bit suspect about results with electronic testing, and ensure that you can test at least a year or so on the lower time frames. I mean, if you go back 6 months is a bit wary, and the only other way to do it is to forward test live on demos, but then you wait in 6 months or a year before you can do anything. So you have an idea, you want to implement it and see how it's panning out. So this works out historically, and put it live. Then you've got to make sure it doesn't wreck your account in the process. So what I'm going to do now is, for some reason, my ad indicator didn't actually work. Well, it did work. Sorry, I couldn't actually get it to enable me to edit the system. It wasn't letting me change text. Okay, we're back. Alright, yeah. So reopening it did the job. Now if I check that just 50 pence without the pound increase, I believe it comes up to about 77% or so, but let me just check. It says a stop loss, initial stop loss of 25, and then it trails. What's happened there? That's wrong. Let me just check on what that is. Oh, I know what it is. Sorry. Yeah, it looks like I've deleted some code. Yeah, okay, my apologies for that. Let me just try and put that in again. Used to the okay, I'll do. Hopefully that should amend it now. Just check. Wait for the system to do its back testing. It will get there. It's going back a year on the 1 minute chart, so it's going to take a little bit of time. A little bit of time it is. I don't want to move that one away. I need to be. I'm on the wrong panel. Detailed report. Okay, £770.15. So that's just on 50 pence. Now, if you look at that, you say, well, £700, not a lot of money. But bear in mind, we're looking at this for a £1,000 account. As I said, I tend to risk only 1% on a program, and then program in, increasing the amount on the trade each time. And what that enables you to do then is build up a buffer, a profit, before you actually start risking more money. And it's the same with your manual trading. You shouldn't be manually trading a lot of money, because you haven't proven to yourself, perhaps, that you can successfully trade when you start out. So when you're starting out, you've got to demonstrate to yourself that you can implement something successfully. Now, it doesn't matter where the strategy comes from, as long as the strategy works, but you have to be able to implement it consistently and effectively. And if you can't do that with a small amount of money, then you can't do it with larger amounts of money. And one of the biggest mistakes that people make is that they see opportunity, say, well, let me risk more money, I'll take out a loan, whatever. um, if they had a couple of trades right, and then they end up losing a lot of money. Basically overtrade, and they get emotional, and you get between 70 and 90% of traders fail, depending on the broker that you speak to. So it's important to be consistent in your trading when you're trading with discretionary trading. With programs, obviously the programs are inherently consistent, so whatever you program in, they're going to do it. Having said that, Bind, sometimes the server lets you down. You get trades that haven't kicked in. And I notice this because I'll look across 5 or 6 accounts personally, which I run programs on, and you'll see errors where, historically anyway, that where some have kicked in, some haven't, and this has to be due to server latency or something. But I've had no real resolution to it. But more recently, since number of complaints, they've been pretty consistent. I say recently, in the last 6 months or so. So they've been doing okay across the board. And if you look at that, I mean, that's 77% on a £1,000 account. Risk in approximately 1%, slightly over. Now with Dow Jones you can risk less than 50 pence. So you could do £2, £3, £2.50. So you could get it to £10 risk starting off if you want an exact 1%. But as I say, for risk management, I tend not to risk 1% a trade for my account. I'll be looking for this at about 10% a year overall profit, give or take. A bit more is always nice. But I don't like initially to risk large amounts of money on a program that hasn't proven itself, even though I've back tested it. So you want the program to demonstrate that it's successful when on the live platform, and that it does actually work in all market conditions. And back testing can give an indication of what it's likely to do. It doesn't mean that in the future that it's going to do that. So you want to see that it does. So the 77% return on anything is pretty darn good, and that's just one program. Yeah, I've got programs here that have sort of 95% success. This is a 63.6% success. Got some chip-in programs that take off smaller amounts more frequently, and you've got the ability here to then incorporate an increase in trade. So I don't start off looking for 10% on my account. Obviously I want to build it up to more, but when it comes up to increasing the trade, so I'm making more than 10%, it's coming out of its own money, not mine. And I like to see it run and be consistent over time before increasing it too much. So starting off with 50 pence, and then after it builds up, increase it to £1, increase it to £2, increase it to £3, and so forth. I mean, if I was, it's £6 for that would be 12 times as much, I think. Let me just back test that. I don't know how much that would be over the year. Is that finished? That has finished, isn't it? Where's it gone? There it is. What's happened there? Oh, that's the old one. Where's it gone? Don't know where it is. get up the detailed report. No, can't be right. 1 second. Oh, I know what that's. It's quit. Because I'm doing £6 a point. It quit itself. I'd have to put in a quit value for £6, which would be a lot higher, obviously. So let me redo that. Stopped off the quit instruction. Oh yeah. Sorry, more interruptions. So let me just get up that detailed report again. Okay, 9,241 if you're risking £6. So you can make, you can make reasonable money with programs, but I wouldn't start off with too high an amount. But if you've got the capital, you can do that. Somebody with a £500 account may say take £500,000 account or something, or £100,000 account might take £20,000 of that as a learning amount to risk. So anywhere between 10 and 20,000. So if you had 10,000, you'd be risking £100 at 1%, and you'd be risking £200 at 2%. If you had a £500,000 account, you would start off with 50,000 and have £500 for 1%. So you just be if you were taking a 1-to-1, that would be £500. So it's all relative, but one of the allures of trading is that you can build that capital up. Where would you get that money to trade? You don't need that much, and you can start off with just 50 pence and have 70 to 80% profit in a year, which is pretty darn good. And that's just one program, and then you build that up after a year. You can then build that up to £1, and after 2 years build it up again, and then you have your discretionary trading on top of that. Not sure why that window's disappearing, but it's going behind that one, I expect. And you just let them run in the background. You can sit back and sip your sherry or whatever, bit of Harvey's Bristol cream. So programming has to be risk managed, but essentially it's implementation of a strategy, and all the code does is implement it consistently when specific criteria are met. Now that could be as simple as a moving average cross, or it could be as complex of identifying when you had a trend flow candle in a trend, which is slightly more complex. But you can equally make some money off very simple strategies, with as long as you know that your take profit levels will be consistently profitable as the program implements it. Then you can write a program for it. I'm just checking the time here. So when you're trading, discretionary trading or with programming, everything is about risk management. If you don't employ proper risk management in relation to your win-loss ratio, you're going to fail. And if you watch some of my earlier videos, I talk about the accumulation of wealth over time and the exponential growth of that, which is quite phenomenal. You'll see why it's useful to actually spend some time getting this right. But every successful retail trader I've ever come across has always has struggled for a while, and then they've taken some mentoring and learned some proper strategies. With programming, you can, well, even with discretionary trading, you can implement your own strategies, and all you're really looking for are repeating patterns that consistently repeat themselves when they appear, and you can reasonably predict uh, in which way the market is going to go when that happens. And that's really all you're looking for. And in programs, all you're doing is writing that into some code, and it's almost plain English actually, the code. Um, it's not particularly difficult to learn, but you can see how much you can make. You know, here we have a program that kind of came to fruition on the Wednesday evening and afternoon, and I thought, okay, let me write this code up and try it out. You know, I had to tweak a few things. I didn't just write it out and it worked. I had to tweak a few things and see what worked best. And we have a successful strategy. So, you know, it doesn't take too much to have good returns on your money. That's just if you were to have run this one program over the last year. I'd say they're reasonably accurate, these back tests, but um, it's always best to forward test them and risk manage. And as I say, when I write a program, I write into it an overall 1% quit value. So um, it will quit. Sometimes I'll write in 0.5%, depending on the risk tolerance of the program. So, and that by that I mean how many times it will lose in a row. So, if you've got a £20,000 account and so you're risking £200 at 1% before the program quits, then you can look back in history and say, what's the maximum of times this is lost? And then you can say, okay, it's lost 4 times in a row, so I want it to quit after maybe 5 times in a row, and if it's drawing down that much, so if it starts off on a drawdown, so I want to divide my £200 by 5, which is £40. So I don't want to be risking more than £40 per trade. That's how I would code in the risk management. So programs are useful. You can see that just that one there on £1,000 account can make 77% in a year, and that's a phenomenal return. You won't get that anywhere else. And you're sitting on your laurels while it does its work. Now it does. Sometimes you have to watch programs. If a chart is volatile, I've got a program on the DAX now at the moment running, and it came in this morning, and it hit a positive stop. So you know, it's made some money, but it slipped because of the volatility. So the stop didn't kick in, and you have to be wary of that. So you can't write in guaranteed stops into the code. And honestly, that's the first time it's happened. But I was sitting here and I thought, what? It's gone past my stop. Why isn't it closed down? Or sometimes they carry on running on the screen, but they've actually stopped out. So when I checked it, it hadn't stopped out. It was still running. So I just closed the program down and that stopped the trade. But I didn't have as much of a gain as I should have. But it can happen with slippage, and that's just one of the market concerns that you need to be aware of, and why the brokers will offer guaranteed stops within a certain percentage. So this is just to give you guys an idea of programming, not in terms of coding, but when a program, that's how much you can make on programs. When I started out, some of the programs I was running live did lose some money, and I thought, "Oh, that's no good." And that's when I started employing the risk management, because I wasn't aware of how you would program it into the programs. And I've always been wary of programs, so employing the risk management has made it all far more secure, because even if it fails, you're only going to lose your 1%, which is a single trade on discretionary trading. So that's not so difficult to make up, and because the programs are trading whenever you tell them to trade, actually, but they can run 24 hours as well. They're consistently looking for those trades, whereas you can't be. And when that criteria is met, it will implement them. The majority of the time. I mean, there are times when the server will miss it, but the point is, it will trade far more than you will, and will catch every trade it sees on that chart in that time. You can't do that, and that's where programs excel with themselves, because they will make more money than you ever will on that particular strategy. Which is why that is up 77%. It's checking all the trades and it's trading them irrespective of what it doesn't think. So it's just doing what you tell it to do. It's implementing the strategy and it's running. That's it. No emotional influences. It's just implementing the strategy, nothing more. And that's what you should be aiming to do if you can. But as human beings, we look for deeper understanding. And we're always looking to amend and put our own influences on it. It's just human nature. So I think that's it for today. The programs, as I say, are quite simple to implement, but that's just an example of how much money you can make on a program. And I prefer just to have several, or programs running, making smaller amounts each year, which is safer. But then they will build up their own capital and eventually risk more. But then that's not really coming out of your account; it's coming out to the profits, and they're all risk managers. They're all risk managed, and if they drop themselves back down, they will write the code in such that it will reduce the amount it's trading if it comes below the thresholds. So you'll have several thresholds for it to increase the amount of trading, and then if it ever drops below any threshold, it'll go to the next trading amount down to what it was for that threshold, and then come back up again when profits rise. So it's constantly risk managing itself. So programs, if you program them properly, can be very safe. And that's something I didn't feel prior to learning it myself. And again, that's due to lack of understanding. So I always stayed away from them, thinking I wouldn't trust the program. But then when you look into it and you learn the programming, you can see how that can be implemented safely. And that's important to remember. It's all about risk management, managing your emotions, how much you feel you can afford to lose. And let me just put this back in. Okay. So that's how it is with 50 pence, and if I add in a pound there after so much profit, as you saw before, it came up to, I think it was 1300, and I think it took about 4 months to come up to that. Let me just check. just for knowledge. And you should just remember that you need to be doing the same with your, it's probably under this window, but you need to be doing the same with discretionary trading as well. If you can't trade small amounts properly and make a profit to build up sufficient that you're actually risking only profit, then you can't trade with higher amounts. Because if you can't do it with small amounts, what makes you think you can do it with larger amounts? And all you're really doing is risking your hard-earned capital. And I certainly, wouldn't be particularly happy with that if I was risking my hard-earned capital. It's you go to the screen is not really wanting to lose it, and you've got to try and cognitively step away from that, really, and be more objective and not think in monetary terms, but think more statistically. So anyway, that's programs. They can be safe and they can be risk managed, and that's an important point, I think, for you to take on board, because it certainly in relation to myself, that's kept me away from programming for years. And don't be afraid of it, really. It's you might think, well, how do you trust a program to work out for you? But it's about understanding the risk management aspect of it that will make you feel safe. If you know that you're only ever going to lose 1% of your capital if this program totally fails, it's not such a bad deal, is it? It's because you're going to be looking to risk 1% on your trades anyway, on discretionary trading as a maximum. And this is doing smaller amounts, chipping away, making far more money than you would probably on that particular strategy, on the amount it's trading. So you can allow it to trade smaller amounts and make sufficient capital for you to be happy with the profit level. And that is on. You probably have to add a couple of £100 actually, but on that particular strategy, which I wrote Thursday morning, £1,000 would run at 50 pence, make you 77%. You could probably add a little bit of capital, £250 or something, and put in the incremental growth into the program as well. And you look at the closed positions, you can see that it started off at £12.50, and that's in January, and it's come up to 25 in April, 1st of April actually. So January, February, March, April. It's actually 3 months, not 4, because it started on the 1st of April. So within 3 months, it's got enough money to increase the trading amount and make a little bit. That's almost double 50 pence trade, so that's not so bad. Okay then, well, I hope that helps. If you did find any aspect of that, don't forget to hit the like button. Sorry, if you found any aspect of that helpful. Don't forget to hit the like button and subscribe, so you get notifications of future videos. And today is the first day actually I've got my resolution correct, I hope, for streaming. Others have been incorrect. So again, hope that helps. Don't forget to hit the like and subscribe buttons, and return for other points of discussion. And the main learning point from all of this is, don't be afraid of programs or programming. The programming language is very simple. It's only ABC maths, fundamental mathematics really, adding, subtraction, division, multiplication. There's nothing too complicated about it. and then always bear in mind that you can program in risk management in a very safe way. So as I say, these programs, any program I put on my system, only ever risks a total quit value of 1% and makes me a lot more. I could risk more. I could do 1% a trade, uh, but I would never do that. Well, my programs do that once they've got sufficient capital